Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to go over just a basic case study on pound New Zealand, just to demonstrate process, the big picture. We'll talk about the playbook, but really reinforcing the understanding of consolidations, the 100 pip box, the timings, 3-day setups, 3-session setups, 3-hour setups, parabolic moves, and how we're not just trying to buy lows and sell highs. It's understanding the templates and identifying the best instruments that are well engineered, not just trying to trade one instrument and catch pips, catch moves, but understanding scalability of rinse and repeat of sizable opportunities. In the playbook, I talk about a lot of destructive behaviors. There's things that traders can control and things they can't control. And most traders don't recognize that it's their own behavior, their own emotional, irrational impulsiveness, impatience, and lack of understanding that actually leads to recurring destructive processes of self-sabotage. I talk about focusing on 90-10 opportunities. When you understand that every setup is either a pump and a dump or a dump and a pump, and that includes the weekly template, then we talked about free cash Fridays, the opening range, the initial balance, because the front side of a move can be the escalator, the backside can be the elevator. Sometimes we'll get a day 3 elevator ride, parabolic. We might get a 3-session parabolic for an elevator ride. That is my objective, is to be identifying the opportunity for a parabolic move where I have zero heat, zero stress. I'm not in the market for an extended amount of time, buying or selling something and holding it for hours and getting pips. I'm talking about setups that are scalable in terms of size, rinse and repeat. And the basic model for entries is very straightforward. So coming back to some simple understandings, we'll walk through a couple of case studies. In this one, we'll talk about the British pound New Zealand, because of the opportunities that present when traders understand that they don't have to trade every day trying to catch moves. There are opportunities each day, but the 5-star opportunities typically will come after a 3-day setup. Now, I don't often trade this pair because the spread is a bit wider, but I want to walk through the process because of the volatility. A lot of traders have asked me about the British pound crosses. I used to mainly just focus on those, but over time I sort of reduced my basket down and simplified it to the major pairs. But in this video, I want to emphasize the importance of stepping back and allowing a template to unfold so that towards these larger opportunities, traders can understand the power of letting the market set up. Now, we can have a day 1, a day 2, a day 3, and a big move down. And that is a pump and a dump template. We can have markets that dump down day 1, day 2, day 3 for a dump and a pump template. Those are basic models. Those are the 2 basic models, a dump and a pump and a dump. So if we have a market that's all over the place and you can't tell what it is, there may not even be a setup there. But we can get a trading range. We can get dump and pumps. We can get a 3-day dump and pump that occurs over Wednesday, Thursday, Friday in a trading range. We can get 3-session setups where we can get a peak formation, and a consolidation for a vertical move that can occur over 3 sessions. This could be US, this could be Asia, this could be London. We can get another 3-session setup again, consolidation inside of peak formations for a 3-session setup. We could have a market that builds over Asia, London, New York back into a peak formation for a vertical parabolic move again. We could have a market that collapses and breaks down, and we get a geometrical range expansion of a larger rectangle for a measured move that continues potentially on a day 3 or outside of a day 3 move, whatever that may be. What I am not looking for is catching little moves and trying to sell the high and buy the low and everything else. I'm looking at the larger consolidations. We talked about 100 pip boxes, 3 levels of rise. We can get a 1 hour, 2 hour, 3rd hour trade, which happens all the time. What can affect this? Well, there's several factors that can affect this, and one of them being major red news on the calendar. Sometimes the news will have very little effect. Sometimes it's built in there on a day 3. On the front side of the move, we can get a day 3 that day 1, day 2, day 3 blows off in the direction of the trend, and at the end of an hour, we can get a move that now coincides and closes as a first red day. And this side, the front side of this move, can be an escalator that's not the cleanest charts to trade, but once we go on the backside, we may get moves that are clean, super clean, and scalable in size. So there are things that I can't control. I can't control a trader's impatience. I can't control their lack of understanding in terms of the setups and the templates. I can't control their impulsive trades that they take that are 50-50. Okay, over trading, over leveraging on poor quality setups. I can't control any of that. I can't control the instrument selection. I can't control what traders do outside their routine or their process. So these are all the things when traders, they think that watching all these things or different things, you need to step back and understand what exactly it is that you're doing and then what you're looking for. And then you need to master the skill and the patience of execution of 90-10 trade setups. Understand when you can scale in. Understand when you can just scalp. Scale the best, scalp the rest in terms of size. Now you'll notice that you can have all kinds of junk on your charts and all these indicators and everything else. And that's fine. My approach is very straightforward. I have a basic model for timings, levels, days of the week, the template, as I mentioned, dump and pump and dump, front side, back side, 3-session setups. Now just looking at an hourly chart, if you come to the screen, and I've talked about this in several videos. If you come to the screen for a session, if you trade Asia or if you trade London or if you trade New York, and we're looking at the pound New Zealand or any instrument, it doesn't matter. But you'll notice that these movements are 1 hour. They're 1 hour bars. And so some of these are 50 pips, some are 25 pips. But my point with this is understanding that when a new hour starts, there may be a trade setup. There may be a 3-session setup that starts at the beginning of an hour or starts at the beginning of the second hour of the session that you're trading. It might be the London Equity Hour. It might be the New York Open after major red news in that second hour. But understand that time rotation, a new hour, instead of staring at little bars, understand the power of the time of day, because that is when a new move may begin. And that new move of that new hour may coincide with a 4-hour movement, a daily movement, because other time frame traders are in the markets. For example, if we look at daily highs and lows, when they're broken, weekly highs and lows, that triggers other time frame traders into the market. There are lots of other videos on the channel regarding that. Highs and lows of the day and the week, coming back to our new Monday to Friday template. So any instrument that I look to trade in the session that I'm trading, whether that may be Asia or New York, mainly 99.9% of my trades are New York, but as the template unfolds, I will look for opportunities in the Asian session for 25 to 50 pip moves, because when we're on the backside, there may be one or two high quality opportunities for a blow off parabolic 3-session setup. So coming back to the process, understanding the day that we're trading, we start a new week. We have a peak formation low on Friday. We have a peak formation high in the US session on our Friday heading into the new week. We also have a 100 pip box, and we've gone up 3 levels of rise, 25, 25, and 25. Potentially then, if this pair is going to maybe give us a best trade setup in the session that we're going to be trading in London or Asia, we may have something up in that third level that gives us an opportunity. This is my consolidation, 3 levels of rise, peak formation low, peak formation high. The volume is now contained inside of that. So I'm looking for an opportunity possibly in either Asia or London or the US, whatever session we're trading. We have a market that, again, escalator up before breaking down into our London session. So for traders who are trading the pound New Zealand in the London session, we have an entry at our Europe Open after breaking down out of the third level, lower lows, lower highs, the setup for the pump and dump on day one. Now, day one, as I've mentioned, and I repeat this over and over, we don't want to counter trend a market that is breaks out on a day one runner, because we're now establishing the opening range for a new template, a new week. Day one on our Monday, we have shorts in the market once we break that daily low. That daily low triggers other time frame traders into the market. We come into our US session and we just have a continuation trade fade. There's no evidence of a reversal, no reason to counter trend. And what gives us the confidence to enter this trade? No major red news on the schedule and the timings. This is a 5-minute chart. Let's zoom in. We have 30 minutes with this market continuing to stay in line with the existing day one short trade. We're in a new 100 pip box. The market allows us to position ourselves to continue if we were shorting this. Now again, I'm just demonstrating day one runner. Don't counter trend a day one runner. We now have day one shorts in the market that came out of our peak formation high, peak formation low. If we take our bodies of that peak formation high and low, that is a rectangle for a 100% expansion of the range. We're now in line with this expansion. It continues to go lower. That is a classical charting pattern, a rectangle. Edwards and McGee, Schabacker, Peter Brandt, just basic textbook classical geometrical range expansion. We're on a day one runner. We have day one shorts in the market. Day one. Heading into our new session, our new day, we have peak formation above double zeros in the US session, peak formation low at 75. The market continues to go lower into the close of the session, into our new day, and we mark off that peak formation low in the new day, the new Asian session. Peak formation high, peak formation low, we're between 75 and double zeros. Traders may have decided to go long in the Asian session. Peak formation high, peak formation low, US session back in line with our EMA for a 25 pip long trade. Now we make higher highs and a higher peak formation low. We're now in the bottom of a 100 pip box, level 1. The market breaks back down below there. Peak formation low in Asia, peak formation high. thesis being now that we have our consolidation down low, putting in a peak formation at the bottom of the 100 pip box for our parabolic entry at the Europe Open back inside of our EMA. Peak formation high, peak formation low, a vertical explosive 50 pip move in the Europe London Open. And what might they be doing? Going after the lower level shorts from the US session on the day one all day fade back to the breakout level of Friday's low. Process. We have our peak formation low at double zeros. We have a peak formation high at 50. Peak formation high, peak formation low, consolidation down low for a reversal if traders were so inclined to trade this back up into our peak formation high. Peak formation low, peak formation high, consolidation down low at the bottom of a 100 pip box at level 1 for the reversal on day 2. No major red news on the schedule. Asia, London, New York. 3 peaks. We now have, again heading into our new day, peak formation high at 50, peak formation low at double zeros. Same process applies. Whether or not there's a setup, I have no idea. But again, depending on the session that you're trading, you would want to be identifying your consolidation and then targeting as to whether or not there's an actual setup for an entry for a parabolic opportunity. This may be a 3-session setup heading into the new day for the London Europe session. We may get an opportunity in Asia. No idea. The market trades back up into our quarter level, beginning of the Asian window, for a short trade a little bit later in the session, 3rd hour. So again, understanding timing now. We're inside. We have a lower peak formation high made towards the close of the US session. Peak formation high above the quarter level, peak formation low below the double zeros. The market takes 1 hour, 2 hours, and the beginning of the 3rd hour gives traders a short trade. So again, understanding the rotation of time. 1 hour, 2 hour, new hour for a vertical move down. Now the same process applies heading into our new session. We have a market that has taken shorts down in 1 push, 2 push, 3 pushes. New session begins in a new hour. A new hour, front side, back side for a long entry. Again, session scalps. Not saying that every single one of these is a best trade setup. I'm demonstrating the understanding of consolidations, time, and front side, back side, 100 pip boxes, new hours, and the session that you're trading. So again, we still have a consolidation between 0 and 50, and we're on day 3. We have major red news on the calendar on day 3. So we have our peak formation high up at 50. This is still one large consolidation that is staying range bound between double zeros and 50s. We have lower lows that have been made in the beginning of the Europe window. We'll just lower that down. We have a market that has pumped up into our peak formation high. 1 push, 2 push, consolidation. We're inside of our peak formation. We have lower lows, lower highs, high bull. And then our news candle goes vertical, straight down towards the low of the Europe London session. Again on CPI. So after CPI is released at 8:30 New York time, the market continues to go vertical down, day 3. So again, I don't trade the news. I wait for after the news. 6 minutes after the news, first bounce continuation continues to go lower on day 3. This is a 1-minute chart. Not to, again, just demonstrating the continuation of that move on day 3 coming out of our consolidation. Waiting for after the news. That breaks the previous day's low. So we have other time frame traders again in the market at the low of the week. Just blow this up. We'll take a step back. Again, day 1 runner. That establishes our opening range. There's the low of the week on Monday. Tuesday gives us our initial bounce. So our original range for the week is still intact. We break out of that on CPI on the Wednesday, day 1, day 2, day 3, to continue lower. We already have day 1 shorts in the market. Essentially, day 2 is an inside day. Day 1, day 2, day 3 continues in the direction of the breakout. Our day 3 now, Monday, Tuesday, Wednesday, could potentially become a day 1 for a Wednesday, Thursday, Friday, day 1, day 2, day 3 setup again for a possible parabolic opportunity on our day 3. Day 3, we go back to the process. At the close of the day, we have a peak formation high. The market continues to go lower before putting in a peak formation low in Asia at double zeros again. So we have a market that's up on the third level, 75. Again, talking about trading either Asia, London, New York, and identifying a best trade candidate. So when I say this, what I'm suggesting is that if you're looking at a basket on a day 3, or you're trading a session, so there's no trade here in Asia, but if I was targeting something in Asia, I want to be able to see that 3-session setup or the consolidation for an explosive move in Asia. This is just the process for the next day, So if you're heading into the Europe-London window, we have peak formation high in the US at 50. 75 is a possible level. That's 3 levels. Down at double zeros, bottom 1, we want to see there's a possible opportunity heading into our Europe-London window for a parabolic opportunity. US, Asia, London for a move in the London session that could possibly go back up to our 3rd level. Again, escalator. This market is erratic. Trading back up, still in the long direction. Traders haven't had any problems if they went long. London open. Back up for 25 pips. Now we're on Thursday, day 4, but Wednesday's our new day 1. So this again is a day 2. Now, Asia, London, New York. We have major red news on the calendar again in the US session, and I talk about where we've gone up to our 3rd level in the gap during the London session. This dumps before the window begins. So remember, I repeat this. If it dumps down before the window begins, think dump and pump. If it pumps up before the window begins, think pump and dump. Traders go, oh, I missed that trade in the gap. This is why traders think, oh, I need to trade here. I need to trade there. I need to be at the screen all the time. No, this just means that if I was looking to sell something, this isn't the setup for me. If I'm looking to buy something, then okay, let's go back to our process. Peak formation low, double zeros, peak formation high, 75, 3 levels of rise. It dumps down before the session begins. What am I thinking? I'm thinking dump and pump because they dumped it down. Now what am I thinking? We have major red news on the calendar. I have to wait until after the news. We have core PPI at 8:30 New York time. This is day 2. Day 1, day 2. But I'm inside. I'm inside the overall peak formation between double zeros and 75, but down underneath 25 is level 1. So if I'm going to be looking for a buy, it's going to be down at level 1. We have our major red news. The next important time frame is the New York Open. New York Open, 9:30 New York time. Again, I am not suggesting that these are all best trade candidate setups, but the process, peak formation lows, down at level 1, we get an engulfment back inside after the New York Open. This is a 1-minute chart for the vertical 25 and then a continuation trade back up to the top of our 50 pip box from 25 to 75 just by waiting and letting the news and then the New York Open take place down at level 1, dump and pump setup on day 2 for a session scalp. Now again, let's take a look at the overall template. Day 1. It goes down. What am I thinking? I'm thinking dump and pump. Day 1, day 2, day 3 keeps going lower. Dump and pump because I might get a day 3 reversal or parabolic trade in line with day 1, day 2, day 3 on the backside. Day 1 down, inside day, continues down on our Wednesday. I start the day count again. This is a 15-minute chart. So we have day 1, day 2 trades back above the Asian range. Day 1, day 2, day 3. Let's draw our peak formation high, peak formation low. We have our peak formation high up at 75. made in our London gap time. We have a peak formation low made in the US session inside of the Asian peak formation low at the low of the week. Okay, day one, day two, higher peak formation low and consolidation. Consolidation heading into our day three. Consolidation above 50 and between 75 into our day three. We have our day one, day two, day three. There are two types of opportunities. This may be a parabolic on day three, if indeed it presents. We have first green day. First green day is a day that makes a peak formation low first and closes above the open at the low of the week. The previous day's low of the day has volume trap below it. That starts our day count on the reversal at the lower high of a week. Okay, that's separate. That is separate from understanding day one, day two, day three, day one, day two, day three. Now we're heading into our Asian session. This chart, if you understand this consolidation at the end of the US session heading into Asia, is a printing press for making money on a day three. We have a 5-minute chart. We have an opportunity to enter a parabolic setup. Now, if you don't understand what the parabolic setup is, go back, go through all the screenshots. They are everywhere. When we get an angled higher highs, higher lows in a parabolic long setup, in a consolidation, 3 sessions, Asia, London, New York, 3 days, day 1, day 2, this is day 3. This market has no major red news in the Asian session scheduled. At 11 p.m. on Thursday, we had inflation, New Zealand inflation expectations, and 2 a.m. on Friday, 2 a.m. New York time on Friday, we have the GDP for the British pound scheduled, and then Friday morning, New York time, 10 a.m., we have prelim U of M consumer sentiment. Now understand, I'm cherry picking because that is your job as a trader, is to cherry pick looking for the best opportunities. We have a day 1, day 2, day 3 parabolic setup heading into our Friday for a possible reversal trade. Why is it reversal? Why is it a reversal? Because we're up high in the consolidation at the end of the US session. And now coming back and looking at our template again. Wednesday becomes our new day 1. Day 1, dump. Day 2, reverses inside. Traps volume at the low of the week. Peak formations below 25 in the US session. Peak formation above 75. And consolidation into the close of the session. This is a possible target now. Okay? Target, but also if we get an explosive move, possibly an opportunity for a range expansion, if indeed that trade opportunity presents. Now notice in the rollover, the market gaps down before auctioning back up into the consolidation. That is essentially a peak formation. Bear candle, the gap is a bear candle spike down. No volume in the market. They just clear out higher level longs from the end of the US session. If they've left stops in the market or anything else, that becomes a new peak formation. Where? At our 50 level. So again, we're still in this consolidation. This is a parabolic setup. Sideways consolidation. Parabolic setup. The next most important thing is understanding timing. We're looking for an opportunity in our Asian window for a possible long entry, maybe second hour, first hour. We get our entry into this market. We have our engulfment. We have our engulfment in the second 15-minute rotation. So again, a very strong indication. The first 15 minutes puts in our little peak formation low in a parabolic setup for an opportunity to enter with a starter. This market, our thesis is a parabolic explosive move. This market continues to go vertical in our Asian session. When we have this move, we come back to our larger time frame understanding. we talked about a possible range expansion. Day 1, day 2 forms a large rectangle. This is a 200 pip box. 3-day, 3-session setup. Asia, London, New York, heading into our new day. So if you're in this parabolic move, we're now targeting possibly a 100% expansion of the range. This has come out of the low of the week. First green day trade. Heading into our London session. We're outside of the 100% expansion already, the high of the day 3 from Wednesday. Do not counter trend a parabolic trade setup. If you're trading the new session, hard to get into a move that's already taken off, but you do not want to counter trend this market. This market continues towards the second full expansion of the range and fulfills that first optimal entry criteria in terms of the range expansion. We have major red news on the calendar in the U.S. session. The market pulls back 10 a.m. New York time, continues the move up for traders on the news for a 50 pip explosive move back in line with the original parabolic opportunity. At this stage, we're in the last session of the day, Asia, London, New York, for a blow-off move. Again, notice it dumped down prior to the session. High is put in place. It dumps down and goes sideways into the news for the continuation trade after the news is released. 5 minutes after, traders can position themselves in the market for the continuation trade back in line with the original parabolic move. That market continues to trade within that 50 pip box, heading into our close of the week on top of the 200% expansion of the range before closing down into traders who were long if they did not take the money, stopping them out at break even. So a day 3 parabolic reversal. This is where traders can make a lot of money. It doesn't have to be a reversal. Point being, all the other session scalps versus a parabolic opportunity that can be sized into when you understand the larger template. If we look at an hourly chart, again, understand high of the week. This is a dump and pump free cash Friday trade. Opening range puts our low of the week in place. They continue to go lower on day 3. They went up day 1, bottom of Monday, day 1, day 2, day 3, continuation. That forms our new day count for a possible either continuation, blow off parabolic on Friday in direction of the trend, or it sets up for a reversal opportunity on day 3 for the parabolic explosive trade back in line towards the high of the week. Day 1, day 2, day 3, day 1, day 2, day 3. Day 3, 3-session parabolics, huge opportunities. And I'm demonstrating this because this template will show up on any instrument. And in this particular case, in this week, the traders who trade the pound New Zealand, if you're patient and understand the dump and pump reversal, one trade on a Friday, one trade. Now, you zoom in on this. Even if you're trading, I don't like trading, I just want to take a couple of trades, whatever. There's an hourly chart. There it is. First entry, 1 bar, in line with the parabolic setup, understanding the trade. It's a 1 bar stop, 25 pips. One trade can significantly grow your account when you understand the setups. So when traders tell me I bought the low and I sold the high and all, I'm looking for parabolic opportunities, large scalable opportunities. It can be on gold, it can be on the pound New Zealand, it could be on the US Japanese yen. It doesn't matter, but I'm looking for the setup and I'm looking for these templates. This is a very well specifically engineered chart. You need to understand the consolidations, the session, the timing windows, the peak formations, and be patient and step back and allow these opportunities to present, because there's nothing new under the sun. It's in the first part of the playbook. There are dump and pumps and pump and dumps, and it will happen again and again and again. But impatience, impulsiveness, all these little things that traders struggle with on their own are what will prevent them from actually sitting back and identifying large scalable opportunities that rinse and repeat over and over again for large 5-star scalable opportunities that when they explode, when you get these consolidations, understand what a parabolic setup is. When these consolidations explode, they are not coming back. So hopefully you got value from today's video, traders. Go and study your charts. Just quit chasing all these different moves, like erratic. There's just simple setups, simple templates, front side, back side, escalator, elevator. There might be a day 1 trade. There might be a day 2 session scalp and a day 3 parabolic. Maybe there's news and it's just not ideal because the news takes it way too fast. Step back, be patient. Understand that when that happens on news, it could be setting up for a larger move when there's no news to position yourself into the market for an easy, scalable 5-star trade setup. Keep it simple. Master these templates. We're going to get the same thing next week. There'll be another 5-star opportunity on 3 or 4 instruments next week. Be patient. Step back. Hunt them out. Understand when that opportunity gives you your best entry, what day count it is, the session timings, everything. New hours, the levels, as simple as possible. If it's not simple and you have to think about it for too long, it's not there. Look for something that's simple. Dump, consolidation, pump. It's that simple. And it can be just for a session trade. But these setups are where traders can make a lot of money. Have a great day, traders. Keep it simple, 1% better every single day, and may the markets go with you.